Hi, my name's Ishmael and today we're going to be talking about mortgage rates and how they're affecting the foreign market and if we're going to see this happening in the UK as well. So today we're talking about the mortgage rates in Denmark in particular. Last week they announced that the mortgage rates are going to be able to get 0% fixed for up to 20 years. That's 20 years fixed rate at 0% interest. This bank which is offering it is Norda Bank ABP, which is one of the 3 largest banks in Denmark. Not only are they offering it, but there are talks about the next 2 largest banks in Denmark which are also going to be offering 20-year fixed rate mortgages at 0%. The question is, if they are managing to offer mortgage rates at that rate, why aren't the English banks? Well, we'll start by going back to 2012, because since 2012, the Danish central bank has actually had negative interest rates at minus 0.5%. The reason they went into negative interest rates is because they were trying to counteract the devaluation of the Danish mark versus the euro when the euro came out. So they were adjusting it by saying, well, if we have negative interest rates, that will change the value of our money and therefore we'll be able to keep our money worth something. And so that's when they brought that in. And since then, they've had quite low interest rates on mortgages. Now, the difference between the Danish banks and the English banks are that the English banks are saying they are probably never going to have this low interest rates. We have seen very short-term interest rates which have dropped to about 0.7, 0.8%. And that is very rare and we haven't seen them very often. But we have seen that in the UK. I don't think that they are going to be actually bringing down the interest rates, and the reason why I don't think we're going to get that low interest rates is because the banking system is done differently. So in the UK what happens is, obviously you've got the central bank or the Bank of England, and then you've got the individual banks which lend the money out, the mortgages, to the borrowers, the person who's getting the mortgage, i.e. the homeowner or the investor that's buying a buy-to-let. So the money comes directly from the bank, so it's the bank's money in effect. However, in Denmark, what happens is when you put money into a bank, you actually can invest your money directly invested into a particular person, into a particular property. So the bank just acts as a middle person, but actually what they're doing is they're taking an investor and giving their finance from the investor through the bank and actually securing a property versus that investor's loan. So if I was in Denmark and I would put £100,000 into my bank, then I would actually be having a £100,000 asset which it would be put against. So it would be like equivalent to a legal charge on the property, and therefore if anything happened to the lender, the borrower not being able to pay me back, I would physically be able to repossess that asset. Well, the bank would repossess the asset on my behalf, and then I would get the money back that way. So the banking system over there is completely different to over here. Over here you put the money in the bank does whatever they want with it, you don't have a say. Over there you have a say, and because you have that, that is why they can give you such low interest rates. Now the question is, if that is the case, then how do the banks make money? Because obviously if the investor is saying, well, if I leave it in the bank it's minus 0.5, if I invest it and lend it to someone at 0%, then I'm not losing money. But then if the borrower is paying 0%, then how's the bank making money? Well, the banks over there in Denmark, the way they make their money is they actually make their money by their fees. So over here you have a fee to take out a mortgage, over there they have the same. And they have a repayment fee, so they get their money at the beginning, they get their money at the ending fees. And so that is why the banking system over there and the banking system over here are such different systems that there is very small chance that we're ever going to be able to get that low interest rates. I can see that the interest rates are probably not going to go much lower than they are now. There is a chance that buy-to-let mortgages will drop a little bit more in line with residential mortgages, because buy-to-lets are known to have a lower risk than an actual normal house. And the banks know that, and they lend based on that, and that's why with buy-to-let they do actually allow you to go up to the 95% like with a normal household mortgage. But they don't generally do that because they don't want people to be able to buy properties really easily, really quickly. Because if you only need a 5% deposit to buy a house as an investment property, then it's a lot easier to become a property investor, and then so many people will be buying them that it will completely change the dynamic of the UK property market. So I believe that the interest rates are not going to go much lower than they are, even though there is a chance of the Bank of England announcing negative interest rates. So if you like this video, please subscribe to my channel, whack that bell notification icon to get notified of a video coming out every Tuesday and Friday.